Hello everyone. Big day today, November 9th. Ethereum is back, and so are we. This is for all you originators, old school consensus trade room. You know who you are. Ecosystem developers. Let's change the world here. All you devs building and holding to create something better. Start to balance things out with some truth, trust, self-identity, Web 3.0. Here we go. In this video, I'm going to go over Ethereum, give you an update with today's events, and also an outlook for the fourth quarter. Before I do, I'm going to go over some of the qualifiers and things that we look at, so give you kind of a little educational foundation. So when I'm going through the analytics, you'll have a better sense of what you're looking at. So have a little school first, and then we'll get into what's happening now. I'm John Slazis from Dharma Capital Trading. I invite you to all follow me on X. Our YouTube channel is the same, Dharma Capital Trading. We're on Substack. We're publishing a weekly outlook on Sunday evenings. And I also work with a company called Bookmap on Discord. And what we're all about is fact-based trading, making decisions based on objective data and analysis. And this is to reduce speculation and subjective biases. So providing you with a statistical baseline, a fact check. What's real? When your emotions get to you, you need a baseline. You need something to fall back on. Keep you objective, keep a clear head. And that's what we're doing with all of our analytics. Everything's quantitative. There's no subjectivity involved. As a firm, our resources, we have analytics, and this is going to help you standardize your decisions. So a lot of the stuff that you'll see is available for all asset classes. We have applications that will normalize this into your workflow if you're a trader or you're an investor. And we do have trader development programs where we can work with you on what your specific tactics or method is or mandate and look to optimize those tactics. Our method is real straightforward. It's consistent. It's always the same. First thing we're doing is we're defining the context, defining what the state characteristics are. What's the environment the market's in? So in a general sense, are we trending? Are we non-trending? Are we pivotal? Are we at an extreme? Those are the characteristics that we want to be aware of because they're going to affect price action. Next thing we do is identify the alignment. Where are these structure points that determine where the state will shift, where the state will transition? When will things change? So if we're trending, where are the points where the market's going to be exhausted and pause? How do you protect your profit give back? Where's the trend going to stop and consolidate? Where's that consolidate going to break and go lower? Where are these key momentum structure points? And we do that so we can align our expectations into an if-then approach. What is more likely to occur? If we're in a specific context with a specific alignment, then we have a better understanding of what's more likely to occur. And that's what it's all about. And this becomes your baseline of your decision making. How much are you going to bet? More or less if you're playing cards. Are you going to double down? Are you going to hold? You're going to base your decisions on what's most likely to occur. Absolutely, you're going to get those feelings, this one time it's going to do it. And you're going to get that in the market as well. And there's only so many times you can fade that. I know what's more likely to occur, but this one time, it's going to be different. And you can only do that for so long. So that's what our method's all about, having that baseline. Understanding the state characteristics. Where those state characteristics are going to change or persist, and the points that they're going to do that. So then we can have more of an if-then expectation, and we can anticipate at this point we're going to do this. So before we go further, just want to go through a disclosure. Basically, if you're trading or you're investing, you want to use risk capital. And if you're not, it's going to affect your decision-making process, and it's not recommended. Everything that we're going over here today is educational, and we're not recommending any trades. Our goal is to empower you, to give you better information, to make good decisions. So if you like what you hear today, I encourage you to go to our website, dharmacapital.trade, and take a look at our analytics, our applications, and our live trade room. All right, let's get into a little bit of our method and what we're looking at. Everything that we're going over here today are things that you can do on your own. You need to know these things when you're making decisions. We have our own proprietary methods, and I've been doing this for over 35 years. I started out on the floor of the Mercantile Exchange and got into crypto in 2013 and I've been a fan ever since. And drank the Kool-Aid in 2016 and that was it. So in our method, it's based on market truths and the foundations of the market that haven't changed. And so what we're talking about right now is structure. Something arranged in a definite pattern of organization. In terms of the market, we've got three basic definitions: price structure, time frame structure, and market structure. So the common perception of price structure. So here we're looking at a chart with price action. I prefer looking at open, high, low, close charts because I can see the structure better. And a main part of price structure is identifying, is the market trending? Is it not trending? Is the market making higher move lows, higher move highs, or is it not? That's the main thing of price structure, and that's a truth. That makes sense. If we can identify a market is building an impulse here, and this is the main low, and now we have a new low, we make a new high. We're watching this underlying. Are we starting to build positive price structure, or on this impulse here, the market is moving negative, and so how long is that negative momentum going to last? Well, as long as it's building this negative structure, and that's what we're watching. We're just watching the market momentum through price. The problem is when we start to add some subjectivity to it. We start to incorporate technical analysis in our opinions. And that's when things deviate. Then they start to not really make sense because you're influenced by your cognitive biases, curve fitting your opinion into these decisions of why you use this trend line or that trend line or this channel or this technical study. So our perspective on price structure, identifying trending higher high, higher low, lower high, lower lows, price structure is a valid objective tool, especially on higher time frames. But when you incorporate technical analysis, it reduces the validity overlaying subjectivity, which can be curve fitted into a cognitive bias. So time frame structure. Time frame structure are the parameters of the trade period which align with fund managers' benchmarks. And what are we talking about? Basically the previous period high, low, last, and midpoint. And so we can look at these time frames, a yearly high, yearly low, last and midpoint, quarterly, monthly, daily. Fund managers really don't go into the daily time frame. Their focus is more on the monthly structure, their monthly performance figures. But all these structures are valid. We break down the acronyms, and we can plot those levels on a chart. And this gives you a sense of momentum. So in this example, here's the start of the new month. We know the previous monthly low is way below the market. Previous monthly midpoint's below the market, and the market's pressing the previous monthly high point. This previous monthly close, what's that? It's just net change for the month. That's your benchmark. So if the market is positive, it should make a higher high, make a new monthly high, and that's going to give us intel. So if you're thinking about selling the market and you're above the previous month high, you need to understand that you're more at risk, because what's more likely to occur is the market's going to go higher. The market's telling you it wants to go higher. Basic fact foundations, basic awareness. So the time frame structure provides insight to anticipate opportunity and proactively manage risk by observing price movement across various time frames. Okay, so what's market structure? So this is our work. So market structure defines the alignment of the state condition. So market structure versus price structure. So as we went over price structure, we're identifying, is the market making higher move highs, higher move lows? Is it breaking structure and it's going sideways, or is it making lower move highs, lower move lows? So market structure is different. It's identifying the parameters of the state condition. So here we've defined the state condition as neutral digestion and with the characteristics of consolidation. And the market structure is identifying the price points that define that consolidation, define that neutral digestion. So market structure is not support and resistance. Market structure is the technical alignment of the market state. So our market structure analytics are called the price map. The price map identifies alignment where shifts in state occur. And this provides a framework to standardize your trading tactics with the best risk-defined opportunities. And the foundations of the price map are the critical range and what we call our R level or reversal level. It's basically the over-under number for the trade period, the sentiment bias. And so these are the structure foundations of the market state. And the critical range is going to tell us, are we holding structure or are we breaking structure? If we're holding structure, then we can expect the characteristics of the state to persist. It makes it easier. It makes it easier to predict what will happen next. If the market breaks structure, we don't know what type of state the market's transitioning into, so it's more difficult. Markets that are in a neutral digestion, the characteristics is to go sideways. But they also have a characteristic when they change and we break out. And typically when the market's going to have a big breakout, it's going to start from a consolidation. And so that's part of the neutral digestion, is how they transition to a new state. So we need to take that into consideration as well. When the market's breaking out, it should just go as a breakout would. And if it doesn't, it's a tell that there's an issue with that. And maybe the market's just expanding its digestive parameters. The sentiment bias is a little different. It's going to skew potentially the state characteristics. So in this example, we have a positive sentiment with the R level below the market. So you've got a market that's in a bull trend, making higher move highs, higher move lows, with sentiment below the market. It's basically telling us all is good with the bull trend. It is also telling us that the real buying energy is way below the market. And so the market may have an issue extending with sentiment so far below the market. Get more energy when you're closer to the sentiment bias. And if sentiment's above the market in a positive trend, it's given us insight that we may be in for a corrective move. And so even though we're in a bull trend, we know that as long as we're below sentiment, the market's vulnerable to corrective action. Again, we are aligning our expectations with what's more likely to occur. All right, let's go through these one at a time and then we'll get on to the market. So we use a lot of color coding, so we'll keep it simple. And our green is our R level. So anytime you see a green on any of our charts, that is the key price point. That is the over-under number. That is basically risk for the trade period. That's where the most liquidity is going to come into the market. In this example, this is monthly structure for Ether. The directional, which is typically yellow, is also the R level. So whatever price map level the R level is on, it'll be green. And the directional is the midpoint of the critical range. So the red levels are our upper structure points, and the blue levels are our major lower structure points. So here UP stands for upside pivot, and DP stands for downside pivot. So this is the critical range where when the market's trading within that range, it hasn't really made a decision of what it wants to do until it busts out of that range. And so you can see here that the market has broken out of its critical range to the upside. Part of the critical range, we also have validation levels. So the validation levels will help give us guidance movement within the critical range and then to validate a breakout. So as you can see, as we started the month, the market stabilized off the sentiment bias, directional, and we had an initial move up to what we call our critical range positive level. So at this point, the market did not validate a move to the upside pivot. And then here it's validated. So once the market validates and takes this level out, it gives us insight that the market may want to gravitate higher up to at least the upside pivot. And that's what it did. And then we broke out to the upside. And here again, the market didn't immediately validate this critical range positive extreme. It had a rejection back down to the figure, and then it rallied. So you can look at the price map as a set of stairs or a ladder, and you're just climbing the stairs, you're climbing the ladder. This is kind of classic where the market will go up to one level, come back, test the other, make a move, stay higher, stabilize, go up, come down. Basically, how is the market climbing the ladder? How many steps does it jump? And so on the color coding for the validation levels, the interior levels are brown because the inside of the critical range is more like a big neutral zone. And then we're using this light pink and light purple as our critical range positive, extreme, and negative extreme. These color codings are powerful because they translate into any market in any time frame. So as you're learning about validation levels, they give you a lot of insight, and you learn about the sentiment bias, you learn about the critical range, you learn about these colors and these levels. Well, it doesn't matter what market we're looking at. This is Ether, it could be Bitcoin, it could be the S&P 500, it could be Tesla. It's all the same, and it's all the same for every time frame. The only difference is the segment moves that the market trades in and the prices. If you're going on a higher time frame, they're going to be bigger moves. The last thing we identify is if we do break out of this critical range, where can we go? And so we use the same red color for price targets, major price targets to the upside, and then we use a dark red for minor price targets to the upside. And on the downside, we use the same blue color as the downside pit for the downside targets, and then we use a darker blue color for the minor targets, or minor levels. And the minor levels are used to work a trade. But the big thing about the segment distance between two major levels is what's the market paying out. The market likes to trade in what we call an average price map distance, so one distance between one major level and the next. So that gives you insight to what kind of money is in this opportunity. So typically the market's going to trade in half segments, full segments, or two segments. And so you can see currently on Ether for this month, we've already had a two-segment move by the 10th. So that gives us insight. Typically a two-segment move. If we are in a FOMO event or any event move, absolutely this market can go off the charts. Any market can. But what's more likely to occur? What's typical? Typically, a two-segment move is a pause point. Just as at the beginning of any trade period, the interior levels are good potential stopping points as the market tries to make a decision where does it really want to go. So as I mentioned from the start of the presentation, all this work is quantitative. And it's really validated by a book by Daniel Kahneman called Thinking Fast and Slow. And a quote from his book is, the outside view offers more accurate predictions than the inside view. So the inside view being your subjective, intuitive function. But that intuitive function is flawed because it has cognitive biases that lean you one way or the other. Typically, those insights work really well, and you make decisions all day long not thinking about it. But when you look at the outside view and when you really need to think about something, the outside view is that statistical view. And that's when you slow down your thought process and you think things through. And that's what we're providing you here. Our method incorporates a statistical outside view, which helps to slow down the decision-making process to minimize biases. So when you see our work, that's what it is. It's your benchmark. And when you understand what these qualifiers are, it'll give you more insight. When you know that, hey, the market's trading at sentiment. This is a valuable area. The market might do something. The market is trading at a minor level. They might be more vulnerable to a bigger move, so I don't want to put on too much size at this point. So it just gives you clarity. And when you clarity, that's when you want to do something. All right, let's get into it, and let's take a look at Ether, and let's see what's going on here. All right, we're looking at the Ethereum perpetual. So let's take a look at price structure. So we have two main impulses here. We've got this negative impulse here, and we've got this what's working on a positive impulse here. And if we look at this impulse, the market broke this low point here, came back down to this 2200 level. This told us that this positive momentum was slowing down. There's a problem with it. We're either going to continue to correct and break, or we're going to go sideways. And so the market recovers here, and we get this attempt to rally again. We actually take out this negative structure, this small impulse here, and then we fail, and we take out this low. So this is significant. So now the market's validating that it wants to go lower, and after we make that initial capitulation, and we pull back up to this area. So this is basically 2200. There's a classic support and resistance here. The market takes out a support level, breaks through it, comes back to it. But this is a real key momentum level for us on this higher time frame. because this was the real failure point, that the market validated this break in momentum, and then we ended up going down to this low. And everything so far has still been just below this price point. So it's all, we had a play for it, we pull back. Are we going to make a new low? No, we're not. Then we have another play for it. Are we going to bust through? No, we're not. So it's working this big energy, and this is a lot of big sideways energy. So it's been difficult trading for a while. It's been difficult being an investor for a while. It's which way are we going? Are we going down? Are we going to go take out these lows, or is this thing going to turn? Well, today's pretty encouraging because now we're getting ready for another retest of that area, just based on price structure. Okay, now let's take a look at our time frame structure, and let's put on where are we at on the previous year's structure. So we have our previous year's low, previous year's close, previous year's midpoint, and previous year's high. And right off the get-go, the market was net change positive, so it opens up above the previous year's close. It's always going to open up the close because that's basically settlement. So right from last year's settlement, it went higher and it didn't look back. So if the market's holding positive price structure from the previous close, where can it go? It can go to the midpoint. This is going to be the big momentum area, and for a transition up to the high, or a rejection down to the previous year's low. That's what it is. We're nearing the end of the year, so the insight was here, and this was kind of that play. We'll see what we can do. So now let's take a look at market structure and our sentiment bias. So you can see last year, with the market closing here and with sentiment below the market likes to make a move towards sentiment. And so that's what happened here, where right from the net change, it was the opposite. It came down to sentiment. We had a big pullback back to the close, previous year's close, and then we broke and transitioned lower, looking for the market to making a play for the previous year's low. And what's happened this year is we've rotated above the yearly sentiment. So this is a big deal. So we're getting, we're finding all this work around the yearly sentiment. Now what's happening is, since we're near the end of the year, this structure is going to change in the new year. So as we approach the end of the year, we start to look at shorter term time frames to give us better insight to what's happening. But let's just throw up the critical range for the year, and let's pull up our validation points. So what you're doing as a trader or as an investor is you're monitoring price action within market structure to give you insights to what's more likely to occur. So when the market likes to trend, and when it broke out of this metric boundary, it should have just scaled and rallied if this was a breakout. The fact that it couldn't hold positive price structure and go is a tell to set up this sideways action. So even though we're currently getting a strong surge, we're coming in, and the volatility has been so low. We haven't even produced. We're just producing a half APMD move basis the yearly. So that it's not that big of a move at the moment yet, and we are coming into this critical point. So it's something to be concerned about with getting too excited as the market is coming into this 2200, 2400 area, because we've got the previous year's midpoint, we've got the yearly 2290 CRX Plus, and we're coming into this price structure breaking point. So markets are like an onion. You've got lots of layers. And so this is the highest time frame layer. So let's start moving ourselves down lower time frames to get more insight to what's going to occur now. We know basis the yearly, we've got some issues here within this zone. So we can tighten that up, and we can get into lower time frames for people that are making shorter term decisions. And that's the beauty of the work, is that depending on what your mandate is, you can use the tools and use the structure that best fit your objectives. I'm going to leave this price structure point on here because I think that's very significant, and that's not going to change. The time frame structures will change. But I've shifted into a 240-minute chart. I like this time frame, and we are going to take a look at the quarter. So currently we're in the fourth quarter, and right now the quarterly structure is a great structure to look at because we're coming to the end of the year, last quarter, and we also have the monthly time frame too that we're going to look at, but we're going to take a look at the quarter right now. So let's take a look at the quarterly time frame. So we know that this is our key price structure point, because if we trade above this point, now we are above the breaking point. So as long as we're below that point, any strength here is suspect, because we really need to validate that to say, okay, that negative price structure is broken. And so just going through the quarterly, here's the in-market opens up, and what's our net change? This is kind of classic action. We talked about how the midpoints become good momentum levels. So right from the get-go, the market challenges the midpoint. It's either going to reject here for a play back down to the previous quarter low, or it's going to violate it and make a play for the previous quarter high. It's just what it is. These are the facts. Just keeping it super simple. You don't need to overthink this stuff. Is the market going to build positive momentum, or is it going to go sideways? Or is it going to build negative momentum? So here we get a rejection, tries to make a play for the lower previous quarter low. It stabilizes. You can see how the close works as a momentum level 2. You can see once we transition through the midpoint, it acts as a momentum area, and then we get the surge up to the previous quarter high, which is happening today. All right, now let's throw on our market structure. Where is sentiment for the quarter? Well, sentiment for the quarter started out above the market. So as we opened up here, we know that the real energy of the market is above here at 2154. And we're just attaining that metric boundary today. And we've got really good alignment here with that price structure point. So this is an over-under number. So if this momentum just charges right through, we'd have both market structure and price structure and time frame structure all in alignment, because we're above the previous quarter high, which is positive, and if we're trading up here, it's all in alignment. But we're not. So that's the main thing. We are not trading above there. We're trading in front of it, and we just had a big surge into this area. So let's put on the critical range just to give you some better insight to how this structure works, so that you can apply it. And again, it's all the same. It's unified across all time frames and all markets. So once you get an understanding of what the yellow line is, what the green line is, knowing that this is a major price point where the liquidity is happening, knowing that the CR minuses is a minor level and it can signal more, like the low point for digestive action or the high point for digestive action as the market rotates within the critical range. Understanding that the market is still in the critical range. And when you're coming into a critical range extreme, it's a big deal. And we're not hoping that we might be hoping the market's going to break through, which we are, but it's not a fact. And so until that's true, we have to respect this, and we're not buying into it. So here you can see how you had good alignment with the previous quarter low and the quarterly CR minus. This is how you can optimize your entry, because these metric boundaries is really where you want to enter the market. You want to avoid trading in the middle. And so if you're trading on a quarterly time frame, looking to accumulate, and you have confluence like this, absolutely, this is a bigger accumulation point, but this is, absolutely an opportunity as well, just lower size. And then when you're getting, you have the buy signal here, you've got confluence, these metric boundaries. Let me blow it up here. We have what we call an alert distance, and we have a variance. And so the variance is really the sweet spot to enter, and the alert distance kind of identifies the whole signal acceptance, but it also identifies when is this price point, broken. And you could see as market comes up here and starts to stabilize here, maybe it's going to make a play for its upper metric boundary. When it comes through here, this tells us that we've broken out to the upside. And sometimes they just go, and sometimes they do this, and then they go. But when you have confluence with this time frame structure, midpoint, at the variance, it gave that part of the boundary more validity. And so the market stabilized above here. And also, it gives you more insight as well, because you know this is a breakout. And if the market continues to base above this area, it gives you insight that this market's strong. Because if it's holding this positive structure, and as long as it's doing that, it's all good. And then when it does this and it bases above here, it's the same. It's telling you this market's strong. And where does it want to go? It wants to go here. So absolutely, you had clarity when the market moved through the previous quarter midpoint that the market wanted to make a play for the previous quarter high. And the fact that you went above the market structure here and broke out above the directional gave us clarity that the market wants to make a play for the sentiment. And it's doing that now. And so we also have this price structure here that we're coming into. This gives us an opportunity to have, to proactively plan our strategy, right? So we know that if the market comes above here, we're positive. Doesn't mean it's going to go straight up. It might not. It might break out above here, have a capitulation up to our validation point, 2379, and then we could potentially digest here. What's going for this market right now is it doesn't look like the longer term where we've had this terrible long sideways action. This market had one corrective dip during its opening phase, and now we've been holding pretty good positive structure, and now we just had an acceleration in that. So that's a little different story. So what's going to happen this month is a big deal, and more likely, what's going to happen coming into the holidays. Bottom line, we're above the quarterly high point. So let's take a look at what if. I always like to do that. What if? What if this happens? So expectation currently is that we're going to see a pause here. Now, if we do get a breakout above the sentiment, that's a fresh positive signal. Again, this is what if. We're not hoping right now. Maybe we are, but we're not going to, if we're going to plan an option strategy, that's one thing, but we're not looking to leverage up on anything at this time because the market has not validated anything, and we actually had a big move into major structure. So we need to respect that. But what if? So the what if is, what do we know on a critical range breakout? It goes 2 segments. And so minimally it should go 1. That's what you base your risk off of. And the objective would be 2. And the best case under normal conditions would be 3. So that's at 3,729. So that's the what if on the on what's happening on the quarterly basis. So let's keep dialing down and take a look at the monthly. All right, same routine. We're keeping our price structure level there. Let's take a look at the previous month. How does that look like? So pretty much right from the get-go, we traded above the previous monthly high. So again, it's all the same as the same method where, what's the context? Where's the alignment? What's happening? So, right from the get-go, what happens? We were trading up here. This is typical when you have a market that closes near one of its previous period extremes. It's typically, a pause before a new follow through in that direction, or you get a rejection right away. So that's always something to consider whenever the close is near the one of the extremes. And so here, normal, we'll rotate around it. What's it going to do? It's going to challenge the high. So it challenges the previous period high. Yeah, it takes it out by a little bit, but and so that is actually a tell, right? Because what happened? The market made a higher month high. So that's positive, positive trend, higher move highs, higher move lows. So you take that into context. And then you look at your price structure, and you've got your previous period lows, and that's the last major low from that peak, and then we made a new high. So this becomes an important point of positive momentum. And then the market, holds positive structure, and we start to base above the previous month's high. This is all positive. This is giving you insight. You're getting clarity. So now let's take a look at the monthly sentiment. And so this is where, market structure, when we're talking about price structure, and then we talk about time frame structure, market structure trumps all of them. So you've got your And one of the reasons I don't talk about technical analysis is because it's the lowest rung, and people get to lean on it as the highest, and it really doesn't mean a lot. What quantitative and factual stuff means more. And so, if you're talking about just the basic structure, price structure of the market, yeah, that's important. What's the next higher rung? Well, time frame structure. Why? Because that's what the fund managers base their benchmarks off of. And what's above that is market structure. And so that's what I primarily focused on, because but it's when you see the confluence of all three, that's when it really gets helps to give you value of that market structure area and helps you really optimize where you want to get involved. And also in this situation, you're not getting if you're just focusing on time frame structure in the previous close, well, yeah, we're below it, but we're right inside. We've traded above the sentiment bias for the month, which is telling us we're positive. And so we're in buy mode above the directional 1785 for the month, because this is where the real energy is. And this is what I was talking about when you get opportunities at sentiment, those are the big bets. That's when you go big, because your risk is so small. Because if we trade below 1760 at the start of the month, things are over. And then, ideally what happens is this low, which might be, it's a bit of a spike, but you can see these lows here. So you have this price structure, so you have good confluence. So when you get really good confluence at a metric boundary, it gives you high confidence in where your stop is, where you're going to bail. When there's a true break in structure. So you really have good. What's your risk reward here? We know that if this market stabilizes here, we could have at least a 2 APMD move, if not a 3 APMD move. So let's put the critical range up there. And so what did that look like? Actually, that's 1 APMD move. I'll put the targets up. So when a 2 APMD move from here, which is a normal R level move, 1, 2, and that's where we're coming into now. And so also this structure, it gives you trade vision. It helps you to anticipate. It helps you to manage your profit give back. Absolutely, this thing can go to the moon for sure. But you also know that when you're coming into this area, it's challenging some structure. And then you also have the confluence again here. So let's put on the minor levels too. So we can just see how, again, this is all the same stuff. We're looking at different time frames, and you're seeing how the green level works, how the brown levels work, how the red levels work. We can keep it super simple. How do these markets climb the ladder? And you can see that the monthly had a similar situation that the quarterly did on its time frame, where it challenged the CR plus. That was in confluence with the previous monthly high. We pulled back. We validated above it. Right here, it tells us we want to go higher. And so that's our tell that the market wants to go higher. And as long as it's holding positive price structure, that's your story. You're sticking to it. Keep it simple. And we know it's an R level trade, so it's a big bet trade. Let's press it. We're above the previous monthly high. As long as we're above that high, yeah, we might get a little nervous here. And if you get squeezed out of some size, as it revalidates, get back in. I get in and out all the time. And so if you're not proven wrong, you're not proven wrong. If the market just dinked you out on your stop, it's a bad stop. So get clarity. What's happening with the structure, and currently what happened is. We've been basically, this whole move has really been initiated here. It's an R level trade, and the minimum target's a 2 APMD move, and we've attained a minimum target. That's the minimum for an R level. Now, R level trades can be 3 segment, 4 segment moves. So based on this month, again, we're looking at the monthly structure, and this monthly structure will change next month. But for this month, we've attained a 2 APMD move. What we've also done is we've broken out above the upside pivot, and that 2 APMD move comes in at 2332, and our what if is close to 2600 on the monthly. So I just added the quarterly R level on here too. So just so we're looking at this confluence of what we have going on here. We've got this 2154 upside pivot for the quarterly, and we've got our 2156 for the UT1, and we've got our price structure around 2190. So we got a lot of confluence happening here. All right, let's keep rolling with this. All right, let's dial in a little tighter, and let's take a look at the weekly. I changed the chart to a 30-minute chart. So here we can see that situation that I spoke of earlier on the monthly, where you have a close near the previous period high or low. And so this is another typical example. They either contain it and they fall back to at least the midpoint or the low point, or they just go. And a lot of times they will just make a move. You'll see this action happen here. We didn't have that many economic reports coming out this week till Wednesday, so the market just took its time and wanted to just do nothing and wait for that. And that's really why we're here where we're at. So on the time frame structure, the market gave us clear insight that, hey, we made a new high for the week. We're positive. And so we had this underlying positive sentiment. So now add the sentiment bias, and that's way below the market. That gives us, okay, this is where a lot of the buying energy is. And so what will happen is, and this is more likely the reason the market did this, because it needs to build up energy. So typically you could see a corrective dip down to this area as the market surges for liquidity, or you'll see the market just tread water because the market, the sentiment's below the market. It needs to build up some energy, and so that's what it did. So let's take a look at the critical range, and we'll put the critical range interior validation points on. And so you can see at the start of the period, that's what was happening is we were getting this half APMD rotational move within the CR plus and the directional metric boundary. This is kind of a classic situation where you've got, structure below the market and the market's basing here. And at this point, people are starting to panic, but you're basically you're coming into your buy opportunity, because market already started to validate and told you they wanted to go higher here. And you have to take everything into account when you're trading, and the news is important, and the narrative is important. So those are just other parts of the onion that that happen in the microstructure. As you keep dialing into this stuff. Basically you had the previous monthly low point below the market as well, so you knew that was really the momentum level that would turn you back down to the previous low, and that was part of the the lower part of the 1841 weekly directional. But again, the directional is that pivotal point within the critical range. If it can validate above this point, it tells you it wants to make a play for the upside pivot. It did. We broke out of the upside pivot. Let me put the upper targets in. And what do we talk about on a breakout move? It can go 2 APMDs, 2 segments, a 1-2 segment move. So we have a target vision. So for this, when you have a real fast move like this into a target area, this is classic. We get a full APMD corrective move back to the upside pivot. So the market validates here, says, yes, we're going higher. We're just climbing the ladder now. And then where should it stabilize? Well, it should stabilize above 1940. It shouldn't trade back below the upside pivot metric boundary. It shouldn't get back inside the critical range if it's really that good. And since we are in an upside pivot breakout, where can it go? We can have a 2-segment move to the upside, which comes in at 2172. And it's interesting that this week, that price structure that we've been looking at is the upper metric boundary for UT2. So let's put on our quarterly R level, and you can see how we've got some really great alignment here with the quarterly reversal up with the quarterly upside pivot reversal level at the lower metric boundary for the week of the 2172 upside target 2 UT2, and then you have our price structure point coming in here at the upper metric boundary of the week. Now it is Friday, and Saturday is settlement period for crypto. And so, Fridays are, can be interesting. And if we're going to get some action, we're going to get it tomorrow. And so with what's happening now, it looks like, everything looks like we're going to get a challenge to this area. So let's keep dialing in. Let's take a look at what's happening for tomorrow. Okay, so I dialed in a little further. We're looking at a 5-minute bar chart right now. Going to add the time frame structure. And we can see that the market is in a situation where we've got the previous day's close is near the previous day's high. So we're pressing this upper extreme. So as I mentioned before, typically in these situations, the market either just starts to go and we get a resumption of this aggressive buying, or we're going to back off and we'll see a corrective dip. Where can it go? It could come back down here to the previous day's midpoint. We do have a big range. And this would be kind of normal positive, digestion. If we got below the previous day's midpoint, it'd be more corrective, and we could see a play for the previous day's low point. So let's add the sentiment bias. And currently the sentiment bias is way below the market at 1974.87. So this is actually even below the previous day's midpoint. So we know that the real buying energy is lower. We're in an event move, so this thing could just go, but it would make sense for energy to back off. So let's just take a look at the critical range. And so this is interesting that we have the upside pivot, just above the previous day's high point. So you can kind of look at this whole band as an extension of the previous day's high. The fact that we made a higher move high keeps this bull trend intact. I'm going to add the validation points. And so we can see that right off the get-go, the market is above the directional, so it's positive. And now we've based above the CR plus, and we've attained the upside pivot, which is also the previous day's high. So the market's making a bit of a decision here. We do have our long-term price structure above the market here. Let me add all of our major levels. So that comes into alignment with the upside target 1. So we have good alignment at the 2144 UP and the 2193 upside target 1. Let me open this up a little bit. Since we're working with the daily structure, we can bring in the playbook. So this will add a little additional granularity to what's going on in the session. So this is our market grid. We color code the different states. So blue is bull trend, brown is neutral digestion. We have Matic in a neutral positive transition. What the grid allows you to do is really identify states that complement your tactics. So for Ether, we are in a bull trend. What the playbook is doing here on the market state, it's defining the bull trend state. A bull trend is a bull trend. It's always going to be the same. Market has an expectation of making higher move highs, higher move lows. This text defines what price action should be doing, and the tells that say, hey, there might be a problem with this bull trend. We might be in transition. So markets are always transitioning from one state to the next, and this text will define it. So the key is to really own these environments so that you can see within the order book, is the market performing to expectation or not? Then the next thing we do is we define the structure of that state. So we can see in this bull trend, we've got sentiment way below the market. So this is where the energy is. So a lot of times when the market is extended like this, it has a hard time getting a lot of energy on upside moves, and you'll have more stop and go action. It's hard to get more of a linear advance. Not that it can't happen. Anything can happen. So, as long as the market's holding structure, it's holding structure. But what's more likely to occur? And also in this section, it identifies the segment moves the market's trading in. So on a daily basis, Ether's trading in $48 segments. So if you put any capital at risk, you're at least going for a $48 move. Typically, you're looking for at least times 3 of that. And on our risk metrics, we're identifying those metric boundaries. And so you have the variance, alert distance, and maximum stop distance. So as an example, you can use the alert distance as your risk, going for a full segment APMD move to keep your risk reward ratios in alignment. So in the strategy section, this is where the if-then decision matrix comes in. If we're in this state, bull trend with this structure, sentiment below the market, these are the optimal strategies for that state and potential hedge strategies for a transition out of that state. So what's the optimal thing to do? Buy a hard break off sentiment. What's the next thing to do? Accept a reversal signal off the downside pivot. What's a reversal signal? So if we did get a sharp break, we're not going to step in front of it and catch a falling knife. We're going to let the market go through that figure. If it can't make it all the way down here and it pops back above that figure, that would be called a reversal. So going through the metric boundary to the downside, back up a bit above the metric boundary, that would be considered a reversal strategy. Those are our optimal things. Those aren't the only things to do, but those are the best ones. Bottom line, you want getting in sync with that theme. And currently we're in this bull trend theme. We're above the directional. The market is in an optimal theme working higher. If the market breaks structure, what are some triggers that will tell us that the market might be transitioning into a hedge theme? If we get a breakout above the upside pivot, we can't hold that breakout, and then we fall back below the metric boundary. That would be a sell UP reversal, with the expectation the market's at least going to break back down to the directional. Since sentiment's below the market, typically a reversal here would be more corrective, so that would be the corrective target. What's another hedge strategy? We break structure below the directional. That's more significant, and that targets the R level. So that's our hedge theme. As long as that, and if we do get that negative momentum, we're watching negative price structure. As long as the market's holding negative price structure, this is true. If it breaks structure, so we'd have two breaks in structure, the optimal theme got broken, hedge thing got broken, then the expectation is we're going to have one of those sideways linear event days. So basis the daily structure, we're trading up here, market's extended, and we're at the previous day's high. We know that we've got structure above the market here at our major price structure point. We have our quarterly upside pivot just above the upper metric boundary basis the daily. So if we did get a surge here that just tops out just above here and produces a reversal, it could have some legs, something to be careful about. We've got additional confluence with the monthly UT1 at 2156, and we can see that the monthly upside pivot is coming in at 1981 off the daily. So it's always nice to look at how these time frame layers overlap. So with the market being a little extended, any new surge that turns into some type of capitulation and we get a reversal signal, an exhaustive signal, we want to respect that. So currently, momentum's focused on this 2111 CR plus. As a failure here would be a break underneath the previous day's close, and we could see some negative momentum, at least a test for the daily directional. All right, so let's wrap this up. Let's take a look at the whole picture. All right, so I've switched back to the 240-minute bar chart, and we're looking at the quarterly structure, and I've included the daily sentiment bias, the weekly, and the monthly. Currently, the market is challenging the quarterly upside pivot, which is the reversal level, so we're in a major structural point. We also know that we have this big price structure point above the market. I'm going to blow this up a little bit. I dialed in a little tighter to a 120-minute. I want to show you this price structure that is in alignment, something I like to look at too. So what you have is the market's coming into this metric boundary, and we've gone through the variance and we're approaching the figure on a quarterly basis. And the market made a new high, pulled back, made a low, structure low on price, and it's above the metric boundary. So this is interesting because we have good confluence with price structure and this metric boundary. So this is the first breaking point. So I even went in further because this is important because we're coming into a momentum area. So that as we go into the more microstructure here, is this market holding positive price structure? Where is that breaking point? The market's making a decision here, and we know this is major overhead, but we also know the market hasn't broken structure yet. So currently it's set up pretty nice because we've got a market that's having positive price structure, higher move highs, higher move lows. We make a higher move high, low, higher high, low, higher high, low, and we make a higher high here. So we've got our first structure breaking point here, and then we have our second structure breaking point here, which is right at the metric boundary. So basically, $2,090 is basically our breaking point. If this market is really going to scale, it's going to hold above 2090. If it doesn't, it's a tell that there's a pause. And we know it's a big issue because this is huge overhead. And we know this is major structure that the market is wanting to retest and breach. And even if, and you could, classic cryptos, this thing's going to breach it and we're going to get a reversal. So it's following this price structure, and as soon as it breaks, which there's likely that it will, and we're going to see a corrective move, you really zero in at these times. And if we do get a break, where can it go? Well, it can come down to the daily R level. And this is also nice because you have the previous swing low is coming in at the top of this metric boundary with the daily R. And so you have this zone here, between 1975 and 1936 as a good base for keeping this positive momentum aggressive. I'm going to back out again. So I've added the monthly in here. So as we've gone over, we've got great alignment here with the monthly at the UT1. The monthly did break out above the upside pivot. That's also coming into alignment here. So that's also identifying that this zone is a great base. So if the positive momentum is going to stay in check, it really is going to base above here. And if we get a failure, below, let's say 1960, it definitely validated underneath this 1936, it's going to tell us that this positive momentum is over for a bit. For now, it's still in play, but it's dangerous because we're challenging resistance. We're not going to step in front of this train. We're going to wait for the market to give us a signal. We're going to tighten up our profit giveback. The market should hold and just go. Basis a monthly breakout above the UP. Where can it go? 2 APMDs. That's up here. And that's in alignment with the quarterly CRX Plus. And so the quarterly CRX Plus is a validation for the quarterly upside pivot. So we have that confluence. So the expectation is that unless we're into one of these 2017 crypto events, and we're just going to go off the charts, what's more likely to occur is we're either going to get a exhaust here, or the market's going to get really excited once it breaks this point and get a lot of people buying it, and they're all going to get sucked in and buy the highs here, and they're going to get stuck, and then more likely we'll come into some type of digestive trade through the weekend. And then we'll see how that market's able to continue to base above basically this 2080 level, and that'll be the key. If we do get a positive signal, it's going to need to base above here, and if it does, it's all good. And then where can it go? So here's the what ifs. So if we validate above this price point, and then any kind of pullback stabilizes above here, what's the expectation if this thing really just gets a little goofy? Well, absolutely, we could see a move up to here. That would be a 2-segment move from the upside pivot, if not 3. Again, right now that's just hope. It's not true. What's true is that the market is challenging major structure, and we need to respect that. And any break in momentum here, especially if we get below this 2080 level, is going to be a problem, and we could see a decent corrective move really quick. So I hope you enjoyed that. If you did, share it with your friends that you think might find that interesting. Follow us on X. Take a look at some of our other YouTube videos. We are on Substack, so you can sign up for our free weekly update that's published every Sunday. It's more options oriented. And if you come to our website, you can get access to all these tools, as well as our live trade room, where we do further, more in-depth teaching and training on our applications, as well as highlight shifts in sentiment, where the market's what the focal point is, what are the containment levels for each, for the current day, and when there are any kind of adjustments that need to be made. So I'm glad to be back. Excited about the volatility. Things are happening. We're going to get there. We are getting there. We are doing this. So look forward to hearing from everyone, and enjoy your evening and good trading. Cheers.